So, welcome to another wonderful winning Wednesday. And that
Yeah.
lady who disappeared last week, she's been found. We have been able to find the one and the only Eunice who had disappeared last week. And that's the reason why today we are carrying forward with our topic from last week. Eunice,
Mhm.
you wanna take the ball?
Yeah. Good to be back. Good to be here. It's a rather cold day for me. It's a little bit cold. It's cloudy. So I missed seeing the sun today. And when I miss seeing the sun today,
No,
somehow
no,
it
no, no, no.
messes me up.
I
So
don't I don't know if that goes with the wonderful winning Wednesday.
it does in the sense that it's still, however, a beautiful day. It's still, however, it turned out to be such a wonderful day. And because of that, I'm excited to talk about our topic for today. And I am hoping and I believe that it will help you as a business owner. But what we really want to talk about today is how you can actually use your whole life insurance policy or your cash value life insurance policy to pay for marketing, to pay for equipment, and to use it as you expand your business. Of course, I'll say your policy is not your bank and is not an investment. I think a lot of times we get into, okay, is this policy some type of an investment that I can look towards a dividend every month and grow the investment? It is not an investment, it's an insurance policy. It has two components to it. It has a death benefit and it has a living benefit. So
Mhm.
when you pass on, your beneficiaries are going to enjoy the death benefit. As you are still alive and living today, you can access and you can use those living benefits. It is those living benefits that you can use to expand your business, that you can use for cash flow in the business when the need arises. However, it has to be set up prior to you tapping into using those resources. Sometimes I hear people who will say, I have X amount of money right now. Can I quickly open this so that I can use those monies immediately? Remember, this is more, the success of this is also dependent on your outlook and how you use it. So, it's not a get rich quick type of scheme. It takes diligence to set it up, to maintain it, and make sure that you're doing the right things. And doing the right things means you are paying your premium as and when and avoiding the policy lapsing. Doing the right things also means you are being financially prudent. And what I mean by that is when you do tap into using those living benefits, you do as much as you can to pay back. Because when you don't pay back, the second and third and fourth time that you need funds, those funds may no longer be available because you have them already with you. You've already taken out those funds. All right. But anyway, before we start, yes, you want to try and use your policy as a financial tool, not only just as an insurance policy for death. You want to be able to use this as something that you can use as a financial tool for your financial needs right now. And part of why the whole life insurance works best for this also is that you have guaranteed cash value. when you do a cash value life insurance, you have both a guaranteed death benefit and a guaranteed cash value. You also have a cash value and a death benefit that is going to be different from your guaranteed values, and those ones are dependent on the dividend that you're going to get when dividends are declared. And then you use those dividends to buy more insurance or however you want to use those dividends. But at the end of the day, what I want you to leave the session with is that there is a portion of that death benefit and that living benefit that is guaranteed. And that's very important because sometimes people lose money in policies and they say, how is this possible? I was guaranteed or I was told that I would not lose my money. So make sure that you understand how the policy has been structured, how the policy has been set up, and what type of policy it is, and whether you have any guarantees or not, right? That's the important thing there. So, your cash value or that living benefit, once you've set up this policy, that living benefit, which is the cash value, that's where you can tap into loans. You can fill out an application. Literally, the application is less than 4 minutes. You fill out the application. The application is not going to ask you for your credit score. It will not ask you for your income or your W 2. How are you going to pay me back? When are you going to pay me back? Set up a repayment plan right now so that I know when you're going to pay me back. So it's a very simple form. Typically, you fill out that form so that the insurance company knows that you have taken out some funds. Had if it were not for those administrative things that have to be kept and recorded, I wouldn't say it's an application form. Nobody is going to scrutinize your finances for you to be able to get this loan. So you fill out that application form and you submit the form. Typically, what I've seen from experience with my policies is typically within two, 2 to 3 days, the funds will be deposited into my account. And because of that, to me, if I can have access to funds with as little input or as little scrutiny into my finances and get those funds in that short amount of time, that's a win for me, especially as a business owner, because sometimes I'm looking to do something. As a contractor, I can imagine if you're looking to buy some equipment, and pretty soon we'll be having a whole bunch of sales, whether they're sales or not, we don't know. But when you have that sale, you are looking for some equipment that you would like to get. When you have the opportunity to be able to tap into your living benefit and get that cash in as little as 2 to 3 working days, that's a win.
Mm.
And do that. Any questions so far?
Well, the only thing that I wanted to add, just for the audience, if it may
Mhm.
not have been as clear as it could have been, is that your life insurance policy is not an investment. That needs to be double clicked at least as many times as possible, that there is an opportunity to use your insurance policy as a tool, right? Similar to any other tool that you might have in your cupboard or in your garage. The tool needs to be understood how to use properly.
Hmm.
So what the cash value, there are two components to the life insurance policy. And this is different. What's different between a whole life insurance policy and a term policy is that a term policy only has a death benefit. whereas a whole life insurance policy has both a cash value component as well as a death benefit. What makes this such an attractive opportunity for business owners is that they can use the cash value component of the insurance policy as collateral for a loan that will be issued by the insurance company. So you are actually taking out a loan from the insurance company and using your cash value as an asset to back up that loan that you're going to receive.
Yeah.
I think
And
that
to,
makes it a lot clearer
yeah.
to others, and that's something that, in this space we often hear that people don't understand it. And I believe that's why when I read, becoming your own banker was something that I didn't understand. So I had to educate myself furthermore, because in the book, Robert Nash talked about not using other types of insurance policies, but only using whole life insurance policies. And the other piece that I learned about this is that whenever you get outside of the whole life insurance policy, the policy itself becomes thicker because the complexity that is there goes up exponentially. And that's the reason why that illustration and that policy becomes thicker, because all of that stuff needs to be explained. It's
Hmm.
already thick with a whole life insurance policy, but making it even thicker, I would I would presuppose, I would be so audacious to say that that is probably the reason why there is a lot of confusion, is because when it comes to using like a IUL for this,
Hmm.
right? People aren't reading the entire document, which you probably need to be a specialist in the field or an attorney to understand the language that is in there. So I would say
Yeah.
always follow the KISS principle, which is keep it simple. You can choose how you want to use the second S. Keep it simple.
Yeah. And just to add on to those points that you just mentioned, one, a lot of times when we talk about the living benefit, we talk about having access to these funds, people often ask, how do I get this money? And how is it that you say that I can take out a loan and still have a dividend paid out? So the money is still growing, compounding, even though I have taken it out. And the reason why that is the case is what you just said, is because when you fill out to request that loan, you are in essence getting a loan from the insurance company and using your policy as collateral. You are saying, I have a policy here, and this policy has a death benefit. Hypothetically, I had a death benefit of 100,000 and a cash value of 15,000. I'm going to the insurance company and I'm saying, can I get a loan for 7,000? The insurance company looks at your policy and says, okay, you have death of 100, you've got cash value of 15. Sure, we can give you that money because we know we have this collateral with us. If anything happens, we have the collateral and we're able to collect the 7,000. That's how it works. And because of that, when you have that 7,000 out as a loan, your policy continues to grow and enjoy compounding interest because you have taken a loan from the insurance company, not from you personally. So your money will continue to grow because you are using the 7,000 from the insurance company, not necessarily using funds directly from the living benefit. That is one of the reasons why a lot of people love this, because they are saying, where else are you able to pretty much get a loan and still have the same amount of money in the living benefit growing?
Hmm.
And when you think about it, the way sometimes we put it out there is that when you think about it, if you walked into a banking institution right now and asked for a loan, or
Mm.
if you not even asked for a loan, if you have a savings account and you have 10,000 in there, if you walk in there and say, hey, I need to use 3,000, once you pull out that 3,000, you have a balance of 7,000. Your interest is only going to be on that 7,000. They're not going to give you an interest based off of the 10 because you pulled out 3. But with a living benefit, once you ask for that loan, you'll still get your dividend based on the 10,000, the 15,000 that your cash value life insurance had, because you are taking that insurance from just the insurance company. And then when we talk about the IUL, one of the things that I always tell my clients to be wary of is to make sure that you understand and you go back to the basics. And what I mean by that is there's a lot of people who love using infinite banking. Nowadays, there's so many terms for it. Infinite banking, what other terms do they use? But yes, there are so many other terms that can be used. Establishing a
Privatized
family bank,
banking.
privatized banking, all of them.
Mm.
Now, when we go back to the basics, when Nash wrote his book and came up with this, he used a whole life insurance policy for a reason, right? Yes, are there other permanent life insurance policies out there just like an IUL? They are. And there's a reason why Nash did not use those and used a whole life policy. So if you're going to say, I am setting up privatized banking or I'm doing infinite banking, go to the basics and go the route that Nash had done. Unless you have another reason where you're saying, okay, I'm just doing something similar. It's not necessarily a privatized banking, then we are talking something else. We are not talking infinite banking. Because one of the things about an IUL is that your IUL doesn't have a guaranteed value. It does have a ceiling where you are not going to lose if and I don't want to get too much into IULs, but it has a ceiling. It's not necessarily a guarantee, right? All right. So moving along into what we really wanted to talk about today, and what we're talking about today is that with that setup of your whole life policy, and with you having two great benefits there, using that living benefit comes in handy for opportunities. As opportunities rise, you are able to tap into using that. One of the other great ways also is that when you tap into that, typically those have a lower interest rate. I just checked one of my policies and the interest rate was at 4.5%. Now, if I walked into a bank now to try and get a loan, what's the going rate now? Of course, they are going to also be
At
looking
least 7.
they're also going to be looking at my credit. They're going to be looking at my source of income and how am I going to repay them and all the other things that they look at. So to be in a position where I can get a lower interest rate and have my funds in 2 to 3 days, to me, that's a winner. For most business owners, I want to believe that that is also a great thing, because when we think about businesses, also, especially businesses, most businesses are not even able to get loans. It's not easy for a business to get a loan because most businesses, unfortunately, do not have established credit. So when you walk into a bank and you want to apply for a loan, many times you are most likely going to apply for a loan under your name, not under your business, because your business does not have any established credit worthiness. So most banking institutions will not or will deny your request anyway. So this is an alternative. This is another tool that you can have with you, that you can use to your benefit to grow your business. Anything else you want to add, Lee?
No, that what we're doing here, and I attended a small business. Sorry, I attended a networking event here in Loudoun County that goes by the name of 1 Million Cups.
Mm-hmm.
And 1 Million Cups actually allows for small business owners to have a 10-minute presentation where you could briefly explain your business to the audience. But since the room is full of entrepreneurs, you could ask them for advice on things that you could possibly do better in order to grow your business, right? We
Mm-hmm.
presented there 1 or 2 years back as well. And the three folks who were up there, I had met a gentleman. His name is Edgar. And I don't know, maybe it was the aura of him standing next to me, right?
Mm-hmm.
But he asked the question that I was going to ask, but he beat me to the punch per se.
Yeah.
So Edgar had asked the panelists, how is it that you first funded your business? And then after you funded your business and you were able to get it to be sustainable, how did you keep that going?
Mm-hmm.
And there's a beautiful lady who is a functional nurse, and she shared that she had been laid off, and that was the motivation for her starting her business. Definitely would want to reach out to her to see if she'll come on and talk about it. But she basically said that she had no funding plan and that she was probably going to run out of money if her business wasn't successful,
Mm-hmm.
right? The other gentleman who was there, he was talking about he had sold a business before, but he didn't save money to pay his taxes at the end of the year. And the other lady who was on the panel, she basically said that she bootstrapped her own business, right? But she learned that she would have to bring on investors so that she would be able to keep the business funding because the bootstrapping eventually runs out.
Yeah. Mm-hmm.
So here we are, value investment partners, having three services that can actually help that business owner. The first thing we want to do is we help business owners turn stress into strategy and survive past year 5, right? How do we do that? We ensure that the small business owner has a business plan that they are operating against. The business plan is going to include market surveys as to how it is that you reach your customer. You are not in business if you don't have sales, and you don't have sales if you aren't meeting that customer. So that's pillar number one. We want to make sure that you're tight on your business, you're tight on your product offering, you're tight on your marketing strategy, you're tight. We typically have a business plan that gets created and it's about 50 to 60 pages of full of this information. The second one, because the business owner the business would probably dissolve without that person in that seat. And we believe that the best way to de risk that business, if the business owner is not in that seat, is with a cash value whole life insurance policy. That's number two. Because as we just said, when you have a cash value, you have collateral to get a loan from the insurance company. There is no approval process because it is collateralized. That's a second one. That's going to help you during those ebbs and flows in your business. Finally, we believe as business owners, we're not talking from some other person's experience. We're talking from our own firsthand experience. Having access to business credit cards, loans, and lines of credit are things that need to be in every business owner's toolkit to survive those times. Not only that, but to grow their business,
Yeah.
right? Because businesses need marketing, they need equipment purchases, and they need to hire people. And you need funding to do each and every one of those things. So, what we wanted to do is share the portfolio of tools that we are bringing to the table to make your business thrive, not just survive, but thrive past year five. So, I think we hit the points today, Eunice, of how they can dive into it. The one thing that I want to talk about when we have the next session, especially when we have the next session on putting life insurance into the portfolio, is the
Mhm.
difference between direct recognition and non-direct recognition, because you touched on that with when you were talking about the loan and the policy and how it can grow in two places at once,
Yeah.
right? I want to make sure that our audience is very clear on what is direct recognition from non-direct recognition when it comes to the insurance policy. So we are at time. We want to thank our audience for another wonderful winning Wednesday. And we look forward
Okay.
to seeing you one last time before we fill up our bellies with loads of turkey, loads of honey baked ham, uh, sweet potatoes, and cranberry sauce. Don't forget the cranberry sauce. The cranberry sauce always has to be there as well. So I'll give it to you, Eunice, to close it out before we set it up for next week.
Yeah, thanks for being with us again on this wonderful Winning Wednesday. It's been a pleasure. It's been great to be back. I missed you guys last week and see you all next week. Hopefully, you'll still find time to come and hang out with us before you either get on to travel or you spend a bit of time with family before Thanksgiving and during Thanksgiving. But other than that, we will see you all next week.